I think it's mainly just sheer size. And well, there's a few things. Size, I think, is probably the biggest one that people just like to talk up. If you write a negative article about a smaller exchange, nobody cares. You don't get clicks. But if whatever article you put Binance name in the title and hopefully something negative, people click more. When it's positive, you say, look, Binance did this thing that was great. Nobody cares, right? So so to sell news has to be negative. And also the crypto, right? So anything that's crypto, they want to associate a negative spin on it. And the third thing is, unfortunately, like I look like I'm Chinese ethnicity, right? So one of my friends in the US, he told me that no, in the US, they care about three things right now: inflation, crypto, and China.
Since the FTX collapse in November, leading cryptocurrency exchange Binance has had to deal with a torrent of fear, uncertainty, and doubt-inducing news headlines. There have also been some not-so-subtle personal attacks against Changpeng Zhao, the exchange's 46-year-old co-founder and chief executive officer. There have been reports that Binance is on the edge of an FTX-like collapse, and it has been commingling customer funds just like the now-defunct cryptocurrency exchange. A few weeks ago, Forbes reported that Binance moved $1.8 billion of collateral meant to back its customers' stablecoins to hedge funds last year. In response, Binance's chief strategy officer, Patrick Hillman, told the American Business Magazine that the movement of money among wallets was common practice and not a problem. Despite Hillman's statement and the many assurances and explanations from Zhao, the FUD has not stopped. Most recently, Wu Blockchain, a Chinese crypto news firm, reported that Binance has started layoffs of uncertain proportions. It added that the layoffs may be related to the poor overall crypto market conditions and Binance's previous large expansion. As it is his practice, the Binance chief executive quoted Wu Blockchain's report to deny allegations that his firm was in any sort of financial trouble. His tweet reads, another day, another FUD. On rumors of layoffs, Binance has a bottom-out program. We constantly say goodbye to people who are not strong fits with the company. Many of them are great people or high performers, but may not fit our unique culture and situation. The program is constant. I push for it on a weekly basis, and there is a percentage of people we have to push out. The Chinese-born Canadian business executive added that he regularly pushes for other cost-cutting measures, which is why the exchange has stayed profitable since the fourth month of its inception in 2017. As he promised in his viral tweet from January, Zhao is focusing on 1, 2, 3, education, compliance, and product and service, and ignoring 4, FUD, fake news, and attacks. Earlier this week, Zhao joined the Bank Less podcast for an insightful discussion, during which he discussed, among other things, the reasons for all the negative headlines about him and Binance. According to Zhao, Binance is being targeted primarily because of its size and the general regulatory crackdown on the entire cryptocurrency industry. While he admits that the past year has been particularly rough on investors, he suggests a few moves that can help you protect your assets more efficiently. He also sheds some light on transparency issues with his exchange. We will not bring you clips from the insightful discussion. Please take a little time to like this video, subscribe to the channel, and turn on post notifications so you never miss any of our regular uploads. Thanks and enjoy the video.
Industry is early. In such early industries, there's always fraud, there's always bad players, there's always failures. And over time, the industry will grow, will sort of accumulate around a few large successful players. But then that's centralization. Today, I think Binance is too large. Binance.com, the centralized exchange, is too large. So I actually want to invest more in DeFi projects and make them grow. I think the future is DeFi, and they will be more decentralized. But at the same time, even if you look at DeFi, Uniswap takes 70% of trading volume in DeFi, right? So there are natural network effects there, but we still want to diversify. And so as an industry, it's better to have multiple players and at roughly equal sizes, more competition, more geographic distribution. So all of those will be better. And the more choices users have, the more competition there are, the stronger players will emerge eventually. So I think that's got to happen. Well, it is happening, but in the process, it's never smooth. It's always going to be issues. If you use a centralized platform like Tether, like Binance, we want to be as transparent as possible, but there are limits. So in the last year, we've done proof of reserves. We actually did a new mechanism of proof of reserves using zk Snarks. It was actually suggested by Vitalik, and we worked with their team to do that. There are limitations to proof of reserves. There are limitations to everything. So, and as a private company, we also need to make sure our privacy is protected, right? So if we publish all of our wallet addresses that we use, and you'll be very clear which vendors we use, and those vendors may be attacked by hackers. Our SMS providers, which has been attacked by hackers before, our email providers, which has been attacked by hackers before. So there are privacy, security, and other competitive considerations. We're not a public company. We may not want to open our books so that our competitor knows exactly how much we spend on HR, exactly how much we spend on security, how much we spend on marketing. And then, so there are considerations there. So businesses are not complete transparent boxes, right? So they and Tether, right? So which bank do they use? And 4 or 5 years ago, every time they release which banks they use, that bank gets shut down, right? So there are real operational considerations. I'm not saying that. No, I do think that Tether is too much of a black box as an outsider. So. There are those considerations, and then there are FUD. There's FUD that comes in, and then there's what do the users believe, right? How do we find truth? So fundamentally, it's risk management. If you're using a new exchange platform, don't put all your money on one platform, and don't put all your money in one DeFi project. So that's risk management. Don't put all your money in one wallet.
During his interview with Bankless, Zhao stresses the need for proper asset allocation by paying adequate attention to diversification and risk management. According to the 46-year-old billionaire investor, it is also important to educate oneself about all the risks attached to using an exchange or firm before getting on board. He cautions that this might require extra effort, especially researching and reading outside what the media reports and learning to filter the truths and half-truths from the lies. He also believes there is an urgent need for the restructuring of our educational system so children learn more about critical thinking than just blindly digesting what they are told. Here are more clips from the interview.
So this diversification and this learning about different the projects you interact with, learning about the platforms you use, learn about the ledger technologies, understanding those concepts. Education, I think, is the best thing. And then there are fraud, which are very hard to differentiate. FTX, we didn't see that coming. Luna, we could have seen that coming. To be honest, the design was flawed. You can't mint Luna to try to push back the UST. That doesn't work. Minting doesn't increase value.
Seems so obvious now.
It seems obvious now, but some people actually did point that out, but nobody listened. Well, very few guys listened. So now we're learning that lesson. Three Arrows was a mismanagement of funds. They lost a bit of money on Luna, and then they went a bit crazy, or they went very aggressive. They lost more money over time. And then Three Arrows probably brought down Voyager and Genesis because they moved a lot of money to them. It was a very convoluted web of loans, borrowing going on. I actually don't know the full story. I've seen bits and pieces of it. And then there was Genesis, and then even Gemini is somehow involved in there. And then FTX happened, which really exaggerated all of those things. So the industry does have systematic risk, right? So in this last 4 years, this DeFi cycle, there's a lot of borrowing, there's a lot of loans, there's a lot of high yield APY. All of those are high risk. So if you want high returns, you're going to deal with high risk. So and also people should learn to judge businesses for what they are, right? So there are businesses that are very simple that make money. Tether is one of them. They hold a large amount of reserves and they just make money on interest rate that's billions of dollars. Binance, we run a slightly more heavier business. Our business model is very simple. People trade, we charge commissions. People can get a feel how many users we have. Just by the amount of FUD that we get, just by the amount of news articles that cover us, etc. So people can get a sense. And we run a simple, profitable business model, and we don't need to do that. And we also don't have loans, right? We even put out a tweet saying whoever can prove that we actually have any meaningful amount of loans from anybody can claim $15,000. No one came forward. It was actually posted by a friend of mine, the founder of Bitfury, George. And no, he's a friend of mine, but he's very independent from us. We don't have any business relationships. So we have done our part to be transparent, but the businesses have limitations on how transparent we can or will be. There is always a level of risk with any product you use, with any platform you use, with any contract, even using a bank, right? We've seen banks fail. And actually, we now know many of them fail. So I think it's really the fundamental risk management and ability to research and not get simple-minded, just read one article and believe everything in that article, both good and bad. All of those things need to come into play. But we don't teach our kids in school about this, right? So we don't the students are young kids are taught in school to believe what they read. And that is not good. We need to teach more about critical thinking, challenging everything. So we need to drill those skills into young generations. But I think as the technology are providing more information, more access to decentralization, I think all of those things are coming together. Yeah.
During the interview, when asked if Binance could purchase a bank that would solve the industry's banking issues, Zhao announced that Binance may make small investments in a few banks, with the hope that those banks will become more crypto-friendly. However, he added buying a bank or even investing in different banks might not solve the industry's many issues with the banking sector. Zhao believes only regulators can put an end to the industry's challenges with the banking sector. In other news, Tether's USDT has hit a new all-time high, surpassing last year's previous market capitalization of $83.2 billion. Tether hit a market cap of $83.23 billion on June 1, 2023, surpassing its previous peak in May 2022. Just before the Terra Luna collapse. Last year, Tether's market cap went from $83.2 billion on May 9, 2022 to $72 billion on June 1, 2022. Following FTX's collapse, the stablecoin's market cap dropped to another low of $65.43 billion. Now it's back above the previous all-time high. According to Binance's chief executive, the regulatory crackdown on BUSD has contributed to Tether's growth. His tweet reads, BUSD, a fully regulated stablecoin, was capped no new minting by the New York State Department of Financial Services at $23 billion. Now it's at a $5 billion market cap. Since then, USDT has seen tremendous growth. While responding to a reply under the original tweet, Zhao also confirmed fears that the regulatory crackdown will send more crypto projects and firms out of the United States. Here is the exchange. Twitter user George Harap tweeted, "Wrong business model on your part. Should never do anything in New York or in that country in crypto. Offshore USD is far better. Currencies pegged to USD but proxy for USD like AED etc. is even better." And Zhao replied with, "To be honest, that was not clear back then, but is clearer now with hindsight. FDUSD is regulated in Hong Kong." The industry responds, FDUSD is a stablecoin issued by a registered trust owned by First Digital, a Hong Kong licensed company. The stablecoin is issued on the Ether and BNB Smart Chain. As Zhao stated in his reply, this is just another sign that the United States anti-crypto crusade has more cons than pros. What are your thoughts on CZ's interview? Do you think Binance is being intentionally targeted, or is it another multi-billion-dollar collapse waiting to happen? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos. Thanks for watching.